My dear students, I hope you all are happy and healthy and you all are studying hard and giving your 100% towards the preparation for your examination. So, students, today I'll be starting with chapter number 8, which is audit report, a very important chapter, right? And before starting with this chapter, let me just ask you one of my favorite questions, that whether you have done or whether you have gone through the entire module till chapter number 7 that we have covered in our earlier session so far. And students, I've uploaded the questions, past year questions with respect to chapter number 6 and 7. I hope you all have obtained that file. So I can see Swati, Om Krishna Gupta, Shoaib, Bhumika. These students have already joined. Others also please join. Kiran Bala. So now let us start with chapter number 8, which is audit report, right? So if you remember, we did the definition of the term audit, whereby the definition is that audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size and legal form, where such an examination is conducted with a view to expressing an opinion thereon. So we have learned as to what the examination is, because we have done various audit procedure, the audit of items of financial statement, right? Now is the time to discuss as to what is the opinion, right? So in this chapter, we'll be discussing, this entire chapter is based on the opinion. There are a number of essays. Then a very important CARO 2020 report is there. So all that we'll try to cover in the 2 sessions that have been uh, given for this chapter, right? So students, first and foremost, this is very basic, that management is responsible for preparation of financial statement as well as for the internal control, so that the financial statements are prepared in a way they are free from material misstatement, whether due to fraud or error. So these are the short forms that I'm using. So free from material misstatement, whether due to fraud or error, right? Now, then what is the purpose of audit? So the purpose of audit is to enhance the degree of confidence of the intended users. So you all know who can be the intended users. Quickly send in your replies. Quickly, I need quick answers. Shareholders, Swati is saying. Government bankers, Om Krishna Gupta is saying third parties, correct, right? So for the intended users, right? And how is this purpose achieved? By the expression of an independent reporting, that is the audit report. So if you just look at the definition of the term audit report, so it is an opinion drawn on the entity's financial statement. So we are not mentioning here internal control, because now do you all know we have done SA 265 that internal control pay auditor is not giving any opinion, right? So it is an opinion drawn on entity's financial statement to make sure that records are true and fair representation of the transactions they claim to represent, right? So when the auditor is giving an opinion, he'll see whether the financial statements are prepared as per the applicable financial reporting framework. The applicable financial reporting framework in case of companies can be your accounting standards, the IND AS, the disclosure requirements are given by Schedule 3. Then it can be Schedule 3 of the Companies Act, that it can be your various provisions of the Companies Act, right? And whether, so when I say various provisions of the Companies Act, so whether the financial statement comply with the relevant statutory requirements. So this is just a base or a foundation of this chapter as to why we are studying this chapter. Bhumika, you are also correct that shareholders, creditors, all those, right? So in this chapter, students will be discussing various essays. Essay 700 is with respect to forming an opinion and reporting on the financial statement. Then we will be doing essay 705 with respect to modification in an independent auditor report. SA 701 relating to key audit matters, SA 706 relating to your emphasis of matters and other matter paragraph, right? So, Abhi, I am just taken the name of the essays that are related to your audit report, right? Apart from these, there are other essays also that also will be covering, right? So, we'll be starting with SA 700. So, forming an opinion and reporting on the financial statement. So, as the name suggests, the essay is about two things: forming an opinion and then reporting on the financial statements. Right? So, it deals with the auditor's responsibility to form an opinion on the financial statement, and it also deals with the form and content of the audit report. See, the auditors across the country, they are conducting the audit in accordance with standards of auditing with respect to companies, right? So there must be certain form and content, a standardized form, a standardized content with respect to the audit report, that is the final outcome of the audit process, so that there is comparability, so that you can say that there is the value of the reporting increases. Why? Because now the users know that with respect to all the companies, this is the standard format. If they have to compare the information between two companies with respect to the audit report, they can compare them, because it is a standard format. It is not happening that one auditor is following some format, other auditor is following some other format. So this SA 700, it brings about a consistency in the audit reporting. It enables comparability, consistency, comparability in the auditor reported globally also, right? And thereby it increases the value of the auditor reporting. The information provided in terms of SA, the audit report that is provided in accordance with SA 700, it becomes more relevant to the users. Why? Because relevant information is there, because we will see that there are certain contents that need to be there in the audit report. So relevant information will be there for the users, right? So there is what consistency is that all the auditors are following this format only. And it also recognizes the need of flexibility. Suppose if any additional reporting requirements are there, that are also met according to the circumstances of the individual jurisdiction. And shouldn't this consistency in audit reporting, it promotes the credibility in the global marketplace. So if I ask you that what is the benefit of SS 700, so you can write all these answers. Further, it helps to promote the user's understanding and helps the users in identifying any unusual transaction. Why? Because now, though, since there is a format, we will see that with respect to key audit matters, SA 701, there need to be a separate section of key audit matter. With respect to going concern, there need to be a separate section if it is required. Then with need to, if there are any disclosures in the financial statement which auditor also wants to draw attention of the users, then SA 706 requires emphasis of matter or other matter paragraph. So since now this is the set format, it helps in identifying any unusual transaction, right? Is it clear? So these are basically the, you can say, the positive or the benefits with respect to SA 700, right? Now, what is the objective of the auditor? So, you all know that to form an opinion on the financial statement based on the evaluation of the conclusions drawn from the audit evidence obtained. So, if you just look at this, so the objective is to give an opinion on the financial statement, and this opinion is based on the evaluation of the conclusions that the auditor has obtained, that the auditor has drawn from the various audit evidence that auditor has obtained, right? And then will the auditor keep this opinion to himself? No, he'll express clearly that opinion through a written report. Simple. So these are the two objectives of the auditor in terms of SA 700, right? Now, when the auditor forms an opinion, he basically sees that whether the financial statement are in all material respects prepared as per the applicable financial reporting framework, right? And when the auditor is forming this opinion, he is concluding that whether the auditor has obtained a reasonable assurance that financial statement as a whole are free from material misstatement, whether due to fraud or error. See, student, this line, these are the lines that you will see somewhere or the other in the exam. You are writing these lines. So why not, as I always say, that why not concentrate your time and energy towards learning these keywords or key lines, right? So when the auditor is forming an opinion as to whether the financial statement are prepared as per the applicable financial reporting framework, his conclusion is that whether he has obtained a reasonable assurance that financial statements are free from material misstatement, whether due to fraud and error. And when the auditor is forming this conclusion, and if I talk about this conclusion, auditor makes evaluation of three things. Auditor makes evaluation of three things. So what are those three things? So the evaluation of the conclusions. So the evaluation of the conclusions, it shall take into account whether sufficient appropriate audit evidence has been obtained. So when the auditor is concluding whether the reasonable assurance has been obtained or not, reasonable assurance. So first of all, to he'll see na, that whether he is in a position or whether he has obtained sufficient appropriate audit evidence. This is sufficient appropriate audit evidence, right? Then I hope you all remember the essay number with respect to the evaluation of the uncorrected misstatements. Quickly tell me the essay number relating to the misstatements. Quickly, Shoaib, correct. Others also please reply. Please reply. See why I'm getting wrong answer and two students have given me same wrong answer. Uncorrected misstatements. How can you write essay 315 in this? Essay 315 is risk of material misstatement. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Abhi I'm talking about evaluation of uncorrected misstatement identified during the course of audit. So this is essay 450. Okay. So when the auditor is forming the conclusion that whether he has obtained a reasonable whether he has obtained a reasonable assurance, he'll take into account three things: that whether sufficient appropriate audit evidence has been obtained, whether the uncorrected misstatements are material individually or in aggregate, right? So uncorrected, the misstatements which were identified during the year, they were communicated to the management and the same were not corrected. So whether those uncorrected misstatements are material individually and in aggregate. So when the auditor is considering the conclusions that whether reasonable assurance has been received, he shall take into account whether sufficient appropriate audit evidence has been obtained, whether uncorrected misstatement are material individually or in aggregate, and various evaluations. So as per SS 700, there are two types of evaluation that the auditor will consider. First is qualitative aspects of entities accounting practices, and then certain specific evaluations. So you may get a 3-mark question that what are the specific evaluations, or you may get a 3-mark question here also that what are the qualitative aspects of entities accounting practices. Now tell me under which essay auditor used to discuss the qualitative aspect with I'll not say with whom because then you will be able to know the essay number. So qualitative aspects, where have you studied this term? So only that student will be able to answer this who has done all the chapters till chapter number 7. And if I tell you the student who have done chapter number 7 also, he or she should be able to answer. Not correct. So my question is, where have you studied the concept of qualitative aspect? So when we were doing essay 260, communication with those charged with governance and management, we did this point that auditor will discuss the qualitative aspect, like the accounting policies, the disclosures, the estimates, remember, with those charged with governance, right? So now let's come back to this topic. So I was discussing that when the auditor is forming the conclusion based on which the opinion will be formed, he shall take into account various aspects. First is whether sufficient appropriate audit evidence has been obtained. Second, whether uncorrected misstatements are material individually or in aggregate. Third, the evaluations. So the evaluation as given by SA 700 are divided into two parts, that is qualitative aspects of entities accounting practices. So accounting practices, what? Your accounting policies, the estimates, the disclosures. And students, you all know that with respect to all such accounting practices, management judgments are involved with respect to the amount, with respect to the disclosures, right? So a number of management judgments are involved. So we are discussing this qualitative aspect of entities accounting practices. So the first point says that auditor will that with respect to the entities accounting practices, management judgments are involved with respect to amount and the various disclosures, right? And under SA 260, auditor communicates such qualitative aspect to those charged with governance, right? Also, students, auditor may come across possible bias in management's judgment. So, what is meant by that? So, uh, let's say some provision is to be made with respect to one debtor. The some provision for bad debt is to be made with respect to, and there are two debtors A and B. The situation is both the same, but this is a related party. So with respect to this related party, the management has made a provision which is different compared to the provision that the company has made here. So possible bias in management judgment, lack of neutrality. For example, let's say if any misstatement was identified during the audit by the auditor and the same was communicated to the management. Now, let's say two misstatements were identified. Now, management corrects one kind of misstatement which has the effect of increasing the revenue. But another misstatement has the effect of decreasing the revenue. The same is not rectified by the management. So can you see that there is management bias? One thing which has an impact of increasing the revenue of the organization, management say, okay, I'll correct it. And one thing where there is an impact of decreasing the profits, management is just ignoring it. So there is lack of neutrality. So the qualitative aspect says that with respect to the qualitative practices, there are a number of management judgment involved with respect to the amounts and disclosures. The auditor communicates them in terms of SA 260 to those charged with governance. However, the auditor may come across possible bias in management judgments and there can be lack of neutrality. For example, I gave you example of what selective correction, that management is correcting the misstatement which is having an impact of increasing the revenue, vis-a-vis management is not correcting a misstatement that is having an impact on reducing the revenue. Further, when the management is making various accounting estimates, so the relevant standard is SA 540. For the purpose of this chapter, just try to understand that this is the relevant essay which addresses the management biases with respect to accounting estimates also, right? So when the auditor is making an evaluation, auditor will make an evaluation of qualitative aspect in the manner that we have discussed. So auditor will see the management judgments with respect to amounts and disclosure. He'll communicate to those charged with governance. He'll see the possible bias of management judgment, lack of neutrality, effect of uncorrected misstatement. So possible bias may, you can give example of what? Selective correction and accounting estimates as per essay, which has been addressed by SA 540, right? Now, auditor also makes certain specific evaluation. See, you are giving an opinion on the financial statement. You are concluding. So, firstly, you have concluded that, okay, sufficient appropriate audit evidence has been obtained, right? Then you concluded that the misstatement, the uncorrected misstatement, so whether these are material or not in aggregate or individually, right? And the third, you made various evaluations. So first is you will evaluate the qualitative aspect of entities accounting practices. Then you will make certain specific evaluations. So you will see that these accounting practices इन्हीं का specific evaluation now we are discussing. So what are those specific evaluation? So accounting practices include accounting policies, the estimates, the disclosures. So with respect to that, what all specific evaluation? So accounting policies mein what will be auditors evaluation? Whether significant accounting policies has been adequately disclosed, whether the accounting policies were selected and applied consistently. Simple, this you have been doing since your foundation only. Then whether the accounting estimates are reasonable or not, whether the information appearing in the financial statement is relevant, reliable, comparable, and understandable, whether adequate disclosures have been made by the management, and the terminology that has been used in the financial statement, including the title of each financial statement. So where PNL is to be used, it should not happen that company is using income and expense. So if PNL is to be used, that will be used. So whether the title of each financial statement, whether it is appropriate or not. So are you clear with this? So we have seen, see, this is an important question from your examination point of view. So we were doing that opinion ke liye, opinion will be based on conclusions. Conclusions ke liye auditor is going to consider three things, that is whether sufficient appropriate audit evidence has been obtained, whether uncorrected misstatement are materially, individually or in aggregate, and the various evaluations. So one kind of evaluation is with respect to the qualitative aspect of entities accounting practices, where we say that management judgment होता है अमाउंट के लिए, डिस्क्लोजर के लिए, एंड 260 में ऑडिटर कम्युनिकेट्स इट टू दोस चार्ज विद गवर्नेंस, बट possible bias or management judgments हो सकता है, lack of neutrality can be there, and then you may use the terms effect of uncorrected misstatement, right? So selective correction and accounting estimates been addressed by SA 540. Selective evaluations may 2 points relating to your accounting policies, then estimate, then whether information is relevant, reliable, comparable, understandable, whether the disclosures are adequate or not, and the terminology as well as, and also the title, whether it is appropriate or not. So this is on page number 8.6 of your module, right? Now, with respect to fair presentation framework, so we will be doing what is fair presentation framework, what is compliance framework, right? So, abhi ke liye just try to understand that wherever there is fair presentation framework, auditor, the evaluation will also include an evaluation that whether the financial statement achieved the fair presentation. So, when auditor is evaluating as to whether the financial statement achieves a fair presentation, auditor will consider the overall presentation, structure, and content of the financial statement. And he will see as to whether the financial statement and related notes represent the underlying transactions and events that achieve the fair presentation, right? So I can say another set of evaluation, but this evaluation is with respect to fair presentation framework only. That is the overall PSC, presentation, structure, content of financial statements. So wherever I'm using these short forms, these are only the techniques for memorizing, not to be written in exam essays. So you will not write this, but just for memorizing, if you want, you can use it. So presentation, structure, and content of financial statement, and the whether the financial statement plus related notes, they represent the underlying transactions and events and achieve the fair presentation. Also, you can say the fourth kind of evaluation can be whether the financial statement adequately refer to or describe the applicable financial reporting framework. So the financial statement should mention that what is the applicable financial reporting framework with respect to which the financial statements have been prepared. So is it clear? Is it clear? So abhi tak what we have done in today's session is audit report, uh, a very simple definition, and then SA 700 we started, that is forming an opinion and reporting on the financial statement, and there like what are the benefits of SA 700 we did, and then the objective of the auditor, whereby we saw that opinion hai based on evaluation of conclusions of, and conclusions are drawn based on what audit evidence obtained. With respect to that conclusion, we had a separate topic that conclusion shall take into account three kinds of things: whether sufficient appropriate audit evidence obtained, whether uncorrected misstatements are material individually or in aggregate, and the evaluation. So evaluations, if you just look at it, so qualitative aspects of entities accounting practices, Second is your specific evaluation. Then fair presentation framework में overall presentation structure, content and financial statement plus related notes, whether they represent the underlying transactions and events and achieve the fair presentation. And last but not the least, that whether the financial statement adequately refer to the or describe the applicable financial reporting framework. I hope it is clear. Now let us just do the meaning of the term general purpose framework. So general purpose, see, framework is what? A structure. And if I talk it with respect to the financial reporting framework, so how the financial statements will be reported, a structure as to how the financial statements will be reported, right? So the general purpose framework is with respect to the common financial information needs of a wide range of users. So this is not a special purpose framework. It is general purpose framework, which is for the common financial information needs of wide range of users. And so in this general purpose financial reporting framework, it can be of two types. One is fair presentation framework and the second is compliance framework, right? So in both the frameworks, there is one thing in common, that both the frameworks requires the compliance with the requirements of the framework. So if certain format is mentioned, that is to be followed. Certain disclosures are to be mentioned, that is to be followed. So both the frameworks require that the financial statement be prepared, the financial reporting process be undertaken with respect to the compliance with the requirements of the framework, right? But with respect to the fair presentation framework, apart from requiring the compliance with requirements of framework, it allows, or another word that has been used is it acknowledges, explicitly, expressly mentioned or impliedly, that management may provide disclosures beyond those specifically required the framework. So the fair presentation framework, it says that whatever is mentioned within the framework, management or the company has to prepare the financial statement as per that framework, right? But it also acknowledges, it allows explicitly, either by expressly mentioning or implicitly, that is impliedly, that the management, if it is required, it may provide disclosure beyond those that is required by the framework. See, just try to understand, the name is fair presentation framework, that इतना तो करना ही है. Then fair presentation के लिए you may make certain addition or you may make certain deletion of those disclosures. So it allows, or the term that is you are going to use or that is used in SS 700 is, as it acknowledges explicitly or implicitly management, that management may provide disclosures beyond those specifically required framework, or it acknowledges, allows explicitly, expressly, that management may depart from the requirement of the framework to achieve fair presentation, and that will happen in rarely, extremely rare circumstances, right? So whatever is mentioned in the requirements of the framework, that needs to be complied, but plus minus can happen. So plus minus can happen is just for your understanding, that it acknowledges explicitly or implicitly that management may provide disclosures beyond those specifically required by framework, and acknowledges explicitly that management may depart from the requirement of framework. See, either only explicitly has been used, because explicitly it will mention that you may depart from the requirement of the framework to achieve fair presentation, and this will happen in extremely rare circumstances. Now, what is compliance framework? Compliance framework requires the compliance with the requirements of the framework, and there is no such acknowledgement as given in 1 and 2 that we have discussed. So यहाँ पर plus minus cannot be done. Whatever is mentioned in the framework, that presentation the entity has to achieve. Is it clear? So it does not contain the acknowledgements 1 and 2. Is it clear? Okay. Now let us discuss, since SS 700 is with respect to unmodified opinion. So unmodified is which is not modified, right? So we are talking about unmodified opinion, right? Now what is meant by unmodified opinion? This is given by SA 700. So we are on page number 8.8 of your module. So the opinion expressed by the auditor, when the auditor concludes that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Quickly tell me, what is the SA number with respect to materiality? Bhumika, Swati, Om Krishna Gupta, correct, 320. Okay, so yes, you can say a clean sheet that the opinion expressed by the auditor when the auditor concludes that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework, the way it is required by the framework. Let's say in case of the companies, let's say by the IND AS or by the AS or by the Companies Act ka disclosure requirement, Schedule 3 ka disclosure requirement. So whether the same has been complied with or not. If yes, then the auditor is going to give an unmodified opinion, right? Now, what is meant by modified opinion? This we will do later on because it is contained in SA 705. Now, if you remember, what is the name of SA 700? It is forming an opinion. So, forming an opinion we have understood, right? उसमें हमने क्या देखा? Conclusions में evaluations है, different kinds of evaluations, and then we saw unmodified opinion. What is it? And then the next part is reporting on the financial statements. So it also contains what? The form and content of the audit report. If you remember, we did this. So now we'll be discussing the second part. So first and foremost, the auditor's report should be in writing. Oral report जैसा कुछ नहीं होता है. Auditor report should be in writing, and it should use the specific headings as given by SA 700 so that the audit report becomes more recognizable. See, students, when you just look at the various heading, that it should have a title, it should have addressee, auditor's opinion, basis of opinion, going concern, key audit matter, responsibility for financial statement, auditor's responsibility for the audit of financial statement, location, then other reporting responsibilities, signature of the auditor, place of the auditor, and date of the auditor's report. So when all such headings will be there, and if you just look at the audit report of the company, you can quickly recognize now that okay, this is prepared as per essays or standards on auditing has been applied when this audit was conducted, right? So when the books were examined, standards on auditing was applied. So that is why it is mentioned that it makes the audit report more recognizable, right? Now let us just discuss these contents of an audit report. These are really very simple, but just let us just have a look at all the contents. So first of all is title. So first is title, right? So the title should clearly indicate that it is a report of an independent auditor. So it should not be auditor's report because auditor to internal auditor bhi ho sakta hai na. So the title will be independent auditor's report, right? So that it distinguishes the report, the audit report of an independent auditor from the reports issued by others. Simple, right? So the way an example is also given in your module. So it is mentioned independent auditor report. I'll give you a audit report. Let us first let us have a look at all the contents. Then the addressee. Addressee is to whom the report is addressed. So first of all, it says SA 700 says the addressee should be as appropriate or based on the circumstances or as required by the law and regulation or the terms of audit engagement. So law, regulation, or terms of audit engagement, they also and the circumstances they also determine as to who will be the addressee. Normally, the audit report is addressed to those for whom the report is prepared. For example, in case of companies, the report is prepared for the shareholders. In case of partnership firm, the report is prepared for the partners. Okay? Is it clear? Quickly send in a replies. Is it clear? Just give me a second. Just a minute. You just go through page number 8.10 of your module. Just give me a second. So I've asked you to go through page number 8.10. So see, addressee in case of let's say this is what statutory auditors of Hot Mill Limited Company. So this is what a company. So the title will be independent auditor report. This is the title and it will be addressed to the members of the Hot Mills Limited. Same way in case of let's say this is what a partnership firm. So the title will be independent auditor report and it will be addressed to the partners of the firm. Okay. Now the next topic, which is really very important from your examination point of view also, is the third content is what? The auditor's opinion. The third one is auditor's opinion. So the first section, of the report is what? The heading is what? Opinion. Because independent auditor report, okay, let me just show you a draft which is given in your module itself. So see, this is page number 8.26 of your module. So this is the title, then addressed to. So I can say this is the addressee and then opinion, right? So the first section of the report, the heading will be opinion, and this opinion paragraph, this will identify the entities whose financial statements have been audited. So let's say if ABC Limited is the company for which audit has been conducted, so it will identify the entity whose financial statements have been audited. State that financial statements have been audited. So the language will be we have audited, right? Identify the title of each statement comprising the financial statement, like the balance sheet, P&L. So all the statements. Refer to the notes including summary, significant accounting policies. So notes to financial statement, significant accounting summaries and other explanatory information, and specify the date of or period covered. So it will be mentioned that balance sheet as on this date, P&L cash flow for the year ended so and so. So let us just have a look. So see, we have audited. So if you remember, this state that financial statements have been audited, right? Because this will change when we will study about disclaimer of opinion, right? So we have audited the standalone financial statement. First was what? Identify the entity. Then second point was that state that the financial statements have been audited. The third point was identify the title of each component of the financial statement. So balance sheet, profit and loss account, changes in equity, statement of cash flow, right? Then including the notes. So notes including the summary of significant accounting policies, other explanatory information, and then date and period. So it is mentioned as on this date, and it is mentioned that P&L for the period ending this date. So all these things have been mentioned, right? So auditor's opinion shall form the first section of the report, and the heading will be what? Opinion. And it shall identify the entity whose financial statements have been audited. It shall state that the financial statements have been audited, identify the title of each statement comprising the financial statement, refer to the notes including the summary of significant accounting policies, specify the date and the period covered by each financial statement comprising the financial statements. Is it clear? Now, so this is what the first paragraph of your opinion section, right? After identifying all these things, the opinion will come that in our opinion and to the best of our information according to the explanations given to us, the aforesaid standalone financial statement give the required information and give us a true and fair view. So if we are talking about unmodified opinion, this will come. And true and fair view in conformity with the accounting principle generally accepted in India of the state of affairs as on this date and profit and loss for the year ended so and so. So this the second paragraph. Now let us discuss this. See, when the auditor is giving unmodified opinion, and here more specifically in terms of SS 700, we are talking about unmodified opinion only. So when the auditor is expressing an unmodified opinion, the language can be, so first option can be that the accompanying financial statement present fairly in all material respects in accordance with the applicable financial reporting framework. Or it can be what? In our opinion, the accompanying financial statement give a true and fair view. Okay? So this was the language that is used here. Give a true and fair view in conformity with the accounting principles, right? So we are talking about what? Unmodified opinion. And when the auditor is giving an unmodified opinion, in such a situation, it will be inappropriate. See, unmodified is that everything uh, is okay. Like it represents a true and fair view, the financial statements. So it will be inappropriate to use the phrases like with the foregoing explanation or subject to. Why? Because these phrases with the foregoing explanation or subject to, it basically suggests a conditional or a weakening or a modification of opinion. So this we are going to discuss when we will do SS 705. Abhi to we are doing what? Unmodified opinion. So when the auditor is giving an unmodified opinion, he should not use such phrases like with the foregoing explanation or subject to. Is it clear? Is it clear? Unmodified opinion we have discussed. So whether it is clear? Okay. Now after the opinion paragraph, what is the basis for that opinion? That paragraph will come directly after the opinion paragraph. What is the basis, right? Again, a very important question. So this can always come for a 4 mark. So a basis of opinion paragraph will directly follow the opinion section. And the heading will be what? Basis of opinion. And students, you will see that when we will be doing essay 705 and we will discuss about adverse, disclaimer, or qualified opinion, you will see that this will change to basis of adverse opinion, basis of qualified opinion, as and when the opinion will be changed. Same way here, the heading was what? Opinion. So you will see the heading will change if it is not an unmodified opinion, that is adverse opinion, qualified opinion, or disclaimer of opinion, right? So, abhi we are talking about unmodified opinion. So, the basis of opinion paragraph will directly follow the opinion section and the heading will be basis of opinion and it shall state that. So, based on what things that the auditor has given an unmodified opinion. So first of all, the auditor will state that the audit was conducted in accordance with the standards on auditing. Based on standards on auditing, only the audit has been conducted. So what is the basis of the opinion? So state that the audit was conducted in accordance with standards on auditing. Then another will be, auditor will say that we have our opinion is based on the fact that we have fulfilled our auditor's responsibility also. So refer to the section to the auditor's report that describe the auditor's responsibilities under the essays. So if you just look at these contents, this is auditor's responsibility. So basis of opinion, auditor will not mention auditor's responsibility or as such, but refer karna hai that the auditor's responsibility are mentioned in this paragraph, right? Because auditor is telling the users that first of all, our opinion is based on the fact that we have complied with essays. Then secondly, that we have fulfilled our responsibilities which are mentioned in so and so paragraph. So refer to the section of the auditor's report that describes that the auditor's responsibility under the essays. And then include a statement that the auditor is independent of the entity in accordance with the relevant ethical requirements relating to audit and has fulfilled the auditor's other ethical responsibilities in accordance with these requirements, that we are independent also, right? And last but not the least, that the auditor believes that the audit evidence that auditor has obtained is sufficient and appropriate to provide a basis of the auditor's opinion. So the basis for opinion section provides an important context about the auditor's opinion. So this is our base now. We are giving an unmodified opinion that the financial statement reflected true and fair view. So what is our basis? That the audit was conducted in accordance with essays. We'll refer to the section of the auditor's report that describes the auditor's responsibilities under the essays. Then we will include a statement that the auditor's independence of the entity in accordance with the relevant ethical requirements have been, relating to audit and has fulfilled the auditor's other ethical responsibilities, and will state that auditor believe that the audit evidence that has been obtained is sufficient and appropriate to provide a basis for auditor's opinion, right? And thus basis for opinion section provide an important context about the auditor's opinion. So you may get a question that the auditor is giving an unmodified opinion, so there is no need to include a basis of opinion section. So the answer is no. Why? Because it forms an important context of the auditor's opinion. Is it clear? So this is the basis. Student, when you will be doing, we will be discussing qualified adverse or disclaimer opinion, you will see that basis of opinion paragraph mein, apart from this, the basis why qualified opinion is given, why adverse opinion is given, or why disclaimer ke liye to there is separate provisions. So why qualified or adverse opinion given, that basis is also provided, right? So let us just have a look at this. So see, we have conducted the audit in accordance with standards on audited. So this is the first base. Our responsibilities under those standards are further described in auditor's responsibility section of our report. This is the second. We are independent. This is the third company of the company in accordance with Code of Ethics issued by ICAI of India together with ethical requirements that are relevant to our audit to the financial statement under the provisions of Companies Act and rules made thereunder. And we have fulfilled the relevant ethical requirements. Further, the fourth, we believe that the audit evidence that we have obtained is sufficient and appropriate to provide the basis of opinion. Is it clear? Is it clear? Okay. Now, the next topic that we are going to discuss is, this was with respect to basis of opinion. Going concern, we have already covered it when we did essay 570. So I'm not taking it here again. Then the next content is key audit matters. I'll take it up when we will be doing essay 701. Then there can be other information wherever applicable, report in accordance with essay 720. So abhi, for the purpose of this chapter, just understand this only, that if any other information in terms of essay 720 is to be there, that is to be reported. So if we just look at this, we have covered title, addressee, auditor's opinion, basis, going concern, essay 570 we have already done. Essay 701 we will be doing later on. Then comes the responsibilities for this financial statement. So see, auditor is mentioning here that who is responsible for the financial statement, for the preparation of financial statements. Okay? Yes, Bhumika is saying, ma'am, irrespective of the opinion, auditor will include basis of opinion section. Yes, even if it is unmodified opinion, basis of opinion section will come, right? So what is the basis of that opinion? We are saying that our opinion is based on that the fact that we have complied with essays, that we have followed the auditor's responsibilities are referred to in so and so section, that we are independent, that sufficient appropriate audit evidence has been obtained. So unmodified opinion, maybe basis will come. And as I've told you that when we will be doing essay 705, we will see that qualified adverse and disclaimer may basis of opinion paragraph will change. Apart from this basis, why the qualified opinion has been given, why adverse opinion has been given, why disclaimer of opinion is there, that will also come. Is it clear? Whose doubt was it? Bhumika, I think. Is it clear, Bhumika? Okay. So the next point is relating to responsibilities for the financial statement. So see, auditor is mentioning in the auditor's report that I am responsible for all these things and management is responsible for all these things. So what are the management's responsibility? Preparing the financial statement as per the applicable financial reporting framework and implementing the internal control necessary to enable the preparation of financial statements which are free from material misstatement, whether due to fraud or error. So I've used these short forms just for, easy learning, easy understanding. These short forms are not to be written in the examination, right? So who is responsible for preparation of financial statement as per applicable FRF and internal control necessary to enable the preparation of financial statement so that they are free from material misstatement, whether due to fraud or error, it is the management. Also, the section of the auditor's report shall describe management's responsibility for assessing the entity's ability to continue as a going concern. So the primary responsibility to see as to whether there is entity's ability to continue as a going concern, it is upon the management. Further, whether the use of going concern basis is appropriate or not, management is going to assess that. And the responsibility with respect to disclosing various matters relating to going concern, again, this is on the management. So here the auditor is going to mention that in the management's responsibility paragraphs. So let us see. So management responsibility for standalone financial statement. So the company's board of director is responsible for the matter stated with respect to preparation of financial statement so that they give a true and fair view, cash flow, and all these things. The responsibility also includes maintenance of accounting records. Then you will see making judgments, estimates that are reasonable, implementation and maintenance of adequate financial records, operating effectively, ensuring accuracy, completeness of data. So everything is mentioned. Further, management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable the matters relating to going concern, and using the going concern unless management either intends to liquidate or the company or cease the operations, and there are no realistic alternative but to do so, right? And then it says, let me just take you through the module for this, that if the management and those charged with governance are different, then the auditor is going to mention that also. Just a minute. So see, oversight of financial reporting process. This section of the auditor's report shall also identify those responsible for oversight of financial reporting process when those responsible for oversight are different from management. In this case, the heading of this section shall also refer to TCWG. So responsibilities of TCWG and management. Is it clear? Right? So this is with respect to the responsibilities of the management. And now comes a big topic, which is what? The responsibilities of the auditor. So basis of opinion paragraph me, we have just given a reference, refer to the section of the auditor's responsibility for the audit of the financial statement. So what are the auditor's responsibility for the audit of the financial statement? So just try to understand that as per SS 700, these are divided into three parts. So it's the SS 700 states that with respect to the auditor responsibility for the audit of financial statement, auditor shall state these three things. Then it says that auditor shall further state these three things. And then this is second part. Then it says that auditor shall state additional communication also. So this is also given. So the auditor's responsibility is divided into three parts. Let us discuss all the parts one by one. So the auditor's responsibility with respect to financial statement. So if I say the first part, so here the auditor will tell the intended users of the audit report that The objective of the audit is to obtain a reasonable assurance that the financial statement as a whole are free from material misstatement, whether due to fraud and error. Students, before understanding this, just try to understand that these responsibilities, you will see that you have done these responsibilities, you have came across these points somewhere or the other. Okay? But now is the time when the auditor is giving an opinion, when the auditor is giving his report to the intended users. So auditor will tell the intended users that users see, my opinion is that the basis is that my responsibilities are limited to all these things. Management is responsible for preparation of financial statement for internal controls and going concern ka assumption, whether use correct and any disclosure and everything. And I am responsible for all these things. So you will see that all these things you have already seen somewhere or the other. Like we will be studying that that auditor will apply professional skepticism, auditor will apply professional judgment. You all are aware. But here by writing, auditor is telling the intended users that see, these are my responsibilities. Okay? So this topic may appear to be lengthy to you because it has three parts. All the parts have their points, but you will see that it is just a repetition of what you are already aware, right? So you all know. So now, since you all know, auditor will tell it to the intended users also that the objective is to obtain reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. Then in the second point, auditor will explain the term reasonable assurance also. Because it is not necessary that the intended user is also a CA. Intended user can be a shareholder. So now let us explain what is meant by reasonable assurance. So reasonable assurance is a high level of assurance, but not a guarantee that audit will always detect a material misstatement when it exists. Simple. And then this misstatement, this also auditor is going to explain. So the first part of the auditor's objective, auditor's responsibility consists of what the objectives of the auditor. And in the objectives, there are two terms used, that is reasonable assurance and misstatement. So the rest of the 2 points are relating to reasonable assurance and misstatement. So I'm just telling you the way how to learn it, right? So first is to obtain reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. And the second is that reasonable assurance is a high level of assurance, but not a guarantee that audit will always detect material misstatement when it exists. And then that misstatement can be due to fraud and error, and it is considered as material when it is expected to influence the economic decisions of the users of the financial statement, and auditor will provide a definition or description of materiality as per the applicable financial reporting framework. So this is with respect to what the first part of the auditor's responsibility. Let me just take you through the module also for understanding this. So we are on page number 8.17. So see the auditor's responsibility for the audit of financial statement. So auditor's responsibility, the section of the auditor's report shall state the objectives of the auditor. And here the explanation is given that whether financial statement as obtaining a reasonable assurance that whether financial statement as a whole are free from material misstatement due to fraud and error, and to issue an auditor's report that includes the audit opinion. So two objectives, right? Out of these two objectives, next point is this reasonable assurance, and the next point is misstatement. So the reasonable assurance is a high level of assurance, but it is not a guarantee that audit conducted in accordance with essays will always detect a misstatement when it exists. And the misstatement can be whether due to fraud and error, and auditor will describe either. So auditor will either describe that they have considered it material if they are expected to influence the economic decisions of the users, or auditor will provide the definition or the description of materiality if it is given in the applicable FRF. So this is with respect to the first part. Is it clear? Now, the second part. So the second part, in the second part, auditor will state that auditor exercises professional judgment and maintains professional skepticism throughout the audit. So you will say we all are aware. Yes, you all are aware, but this information is for the intended user who might not be an or you can say who might not be aware about all these responsibilities. So auditor will state that the auditor exercises professional judgment and maintains professional skepticism throughout the audit. Then auditor shall describe that an audit by stating auditor's responsibilities are. So what all are the auditor's responsibilities? So in short form, in order to understand, I've written essay 315, essay 330. So here it is basically identifying and assessing the risk of material misstatement through understanding the entity and its environment. essay 330 में क्या होता है? Designing the audit procedures, obtaining sufficient appropriate audit evidence. And then auditor will also specify that the risk of detecting a material misstatement is higher with respect to fraud vis-a-vis with respect to error. Obvious है ना, fraud तो it can be concealed also. So risk of not detecting material misstatement is higher with respect to fraud, right? Then auditor will say that the auditor's responsibility is to obtain an understanding of IC. Management responsibility may, we have already mentioned that implementation of internal control is the responsibility of the management, but auditor will obtain an understanding of IC. Evaluating the appropriateness of accounting policy, again another responsibility of IC. Concluding the appropriateness of GCUs. We have already mentioned in management responsibility that usage, disclosure, ability to continue as a going concern, वो सब किसका responsibility है? Management का. But concluding as to the appropriateness of going concern use, that is the auditor's responsibility. And evaluating the overall presentation structure and content of financial statement. This we have all seen today itself. Clear? So this is the second part, that is auditor shall state that the auditor exercises professional skepticism, judgment throughout the audit, and that the auditor's responsibility are to identify and assess the risk of material misstatement through understanding entity and environment, designing the audit procedures, obtaining sufficient appropriate audit evidence, and the risk of not detecting misstatement is higher with respect to fraud as compared to error. Another responsibility is to obtain understanding of internal control, evaluating the appropriateness of accounting policies, concluding on the appropriateness of going concern use, and evaluating the overall presentation structure and content of financial statement. And last point with respect to this part is what? Where SA 600 applies, that is with respect to group audit. Auditor will describe the responsibility by stating the division of responsibility. So let's say the auditor XYZ and associates, it is the auditor of ABC Limited, and ABC Limited is having a number of subsidiaries and branches. And the audit of all the subsidiaries and branches is conducted by other auditors. So with respect to ABC Limited, our auditor XYZ and XY and associates, they are giving the opinion, but they will be using the reports of the auditors of these components. So let me just take you through the module for this point. So see, we are on page number 8.19. When SA 600 applies, so this is with respect to what? Group audit. Further describe the auditor's responsibility in group audit engagement by stating the division of responsibility for the financial information of the entity by indicating the extent to which the financial information of components is audited by other auditors. Just have a look at your example. The financial state information of the components is audited by other auditors. Have been included in the financial information of the entity. Example, the number of divisions, branches, subsidiaries, and other components audited by other auditors. Is it clear? So in the first part, you have seen objectives batana hai. Two objectives are there, reasonable assurance and then to issue an audit report. Then reasonable assurance kya hota hai and misstatement kya hota hai. ठीक है? And in the second part, first is that auditor exercises professional judgment and maintains professional skepticism throughout the audit. Then stating various things like auditor is responsible for identifying and assessing the risk of material misstatement, designing audit procedures, obtaining sufficient appropriate audit evidence, and the risk of not detecting misstatement. Material misstatement is higher with respect to fraud vis-a-vis compared to your error. Obtaining understanding of IC, evaluating appropriateness of accounting policies, concluding appropriateness of GCUs, evaluating overall presentation structure and content of financial statements, and when SA 600 applies, describing the division of responsibility by discussing the extent to which financial information of components is audited by other auditors which have been included in financial information of the entity, like the number of branches, divisions. Quickly tell me, are the two parts clear? Then we'll start with the third part. Just keep on, making a flow chart in your mind that, अच्छा, इसमें auditor's responsibility में first में there are 3 points. Second में there are 3 points. Second point has various sub points also. है ना? Keep on just making a diagram or a flow chart. Then see, we all have done SA 260 and 265. So this points revolves around that only. So further, the auditor's responsibility for the audit of financial statement section, the auditor shall also state that auditor communicates with those charged with governance, planned scope, timing, and significant accounting findings, audit findings, and significant deficiencies in internal control. So it will be mentioned there, right? So just do not consider that why is it mentioned. It is mentioned because the auditor wants to tell the intended users that, see, I have done all these things. Okay? So when auditor communicates a planned scope, timing, or significant accounting findings to those charged with governance, that is covered by 260. SA 260, and significant deficiency in IC is covered by SA 265. So for the purpose of ease in learning, I've mentioned these two SAs, right? And then in case of listed entities, auditor provides a statement to those charged with governance that the auditor has complied with the relevant ethical requirements regarding independence and has communicated all relationships and matters and the safeguards. Remember, we did this point exactly the same when we did SA 260. Quickly send in your replies. Let me just show you also so that you are able to, relate it. So when we were doing SA 260, see, SA 260. See, qualitative aspect वाला point we did today. ठीक है? And then listed entities के case में see, complied with relevant ethical requirement, relationship and matters and the safeguards. This is exactly the same. Communicate all relationships, matters, safeguards, relevant ethical requirement. Clear? This is on page number 7.44. I hope you are able to relate it. Okay. And then with respect to listed entities, auditor is going to also state that with respect to SA 701, whatever are the key audit matters, these are communicated in accordance with SA 705. And otherwise, SA 701, if time will permit, we'll do it today or in the next session. Is it clear? Is it clear? So if we just summarize, so auditor's responsibility, first May, it is with respect to objectives, which is what? That auditor obtains a reasonable assurance that financial statement as a whole are free from material misstatement, and then to give an audit report. The second point is with respect to this reasonable assurance that it is a high level of assurance but not a guarantee. And the third point is with respect to this misstatement, that misstatement can be due to fraud and error. And what is meant by material, that when it is expected to influence the economic decisions of the users of the financial statement, or auditor will give a definition or a description as per the applicable FRF. See, these are the keywords that you need to remember. ठीक है. This was with respect to first part. The second part में what is there, that auditor says that first is that auditor exercises professional judgment and professional skepticism throughout the audit. First point is this. Second point I'll just discuss. Third point is relating to your group audit SA 600 में. ठीक है. Now with respect to the second point, first of all, auditor describes that auditor responsibility is to identify and assess the risk of material misstatement, to design the audit procedures, and to obtain sufficient appropriate audit evidence, and that the risk of not detecting a material misstatement is high with respect to fraud. This is one point. Then the second is that auditor will obtain an understanding of IC. The third is that auditor also evaluates the appropriateness of accounting policy, then also concludes upon the appropriateness of management's use of going concern. And the fifth is with respect to the presentation, structure, and content of the financial statement. And the third is with that auditor communicates to those charged with governance what planned scope, timing, and significant audit findings and the significant deficiencies in IC. And that with respect to listed entities, auditor provides those charged with governance with a statement that it complies with relevant ethical requirements regarding independence, communication, all relationship matters, and the safeguards that are taken. Further, that all the matters communicated as key audit matters are communicated in accordance with SA 701. So I hope the responsibilities are clear. I want you to reply whether understanding as well as learning is also somewhat done in the session itself. Learning also. See, I'm not taking all these chapters in detail. Why? Because here we are to revise. So revision may, if you are able to learn also, that is a plus point. In the revisionary sessions, if you are able to learn also, that is a plus point. So on Krishna Gupta, Bhumika, Swati, Shoaib, all are saying, yes, ma'am, it is clear. So chalo, we'll do one thing. We'll take a break of 10 minutes here and then we'll do the rest of the content of the audit report. So students will take a break of 10 minutes here. Back after the break. So we have completed what? Auditor's responsibility as one of the contents of what? Audit report. Okay. Then what we are left with is other reporting responsibilities, signature, place, and date of the auditor's report. So other reporting responsibilities, what? The reporting responsibilities in addition to the auditor's responsibilities under the SA. So if in addition to the responsibilities that are given under essays, right? In addition to that, if there are any reporting responsibilities like reporting for under CARO 2020 required by Companies Act. So that will come in separate section, and the title of that section will be report on other legal and regulatory requirements. We will be discussing CARO 2020 later on. Okay? So this is with respect to other reporting responsibilities. Now the next is signature of the auditor, then the place of the auditor and the date of the audit report. So first and foremost, let us discuss the signature of the auditor. So who will sign the audit report? The auditor, that is the engagement partner in his personal name, and he'll be mentioning his membership number also. In case of a firm, so this is if it is a proprietorship. In case of a firm, in the personal name of the partner along with the membership number and the name of the audit firm along with the registration number of the firm will also come. I hope simple hai, easy hai, clear hai. ठीक है? So this is with respect to signatures. Place of signature, the place signifies the specific location. So city where the audit report is signed. So it is the city. See, one topic is left. I forgot to cover this. So I'll cover this once we cover these three topics. So place of the signature. So auditor shall name the specific location, that is the city where the audit report is signed, right? So if it is signed in New Delhi, New Delhi will come. If it is signed, let's say in Haryana, Haryana will come, right? Then the date of auditor's report. Where have we studied something about date of auditor's report in chapter number 7? What was the relevant essay where we have studied about this topic? Quick and correct response from Om Krishna Gupta. Others also please reply. Date of audited report. Shoaib, check your answer. Right. Shoaib, right. 560 and 580, right? So date of auditor's report. So the audited report shall be dated no earlier than the date on which auditor has obtained sufficient appropriate audit evidence. That is, the date of audit report shall be after the date the auditor has received the sufficient appropriate audit evidence. Why? Because the auditor's opinion is based on the audit evidence that he has obtained. Also, the audit report shall not be dated earlier than the date on which auditor obtains sufficient or appropriate audit evidence that all statements that comprise the financial statement, including related notes, have been prepared. See, after the financial statements have been prepared, after that only the auditor's report can be signed. Also, those with the recognized authority have asserted that they have taken responsibility of those financial statements. That is, this same has been approved also. So once the financial statements has been prepared, the same has been approved by board of directors, then only after that there will be signatures on the auditor's report, right? What is the significance of date of audit report? It informs the users of the audited financial statement and the audit report that the auditor has considered effect of events and transactions of which auditor became aware and that occurred up to the date of audit, or up to that date. That is, in terms of SA 560, we all have done as to what are the auditor's responsibility with respect to subsequent events. I hope you all remember, right? Now, when the auditor is put in the signature, there is a concept of unique document identification number. So I am on page number 8.22 of your module. See, earlier it was noticed that certain documents, financial documents and certificates were attested by third persons who were non-CAs, and they were representing themselves as CA. In order to curb this practice, the Professional Development Committee of ICAI, it implemented in a phased manner innovative concept of UDIN. ठीक है? Unique Document Identification Number. So what happens is, chartered accountants having full-time certificate of practice can register on UDIN portal and generate UDIN by registering the certificates attested certified by them. So what the audit reports that are generated that are signed by them, their UDIN number is also to be mentioned. So auditor is required to mention the UDIN with respect to each audit report being signed by him along with his membership number while signing the audit report, and the same is illustrated here. So the signatures of the signatures will come. Then if it is in the it is a partnership form, then the firm's name and the firm registration number will come, signatures will come. Then name of the member signing along with his designation, the membership number and the unique document identification number, the place and date of signatures will come here. Okay. Now one topic is left which I missed by mistake, which is what? Location of description of auditor's responsibility for the audit of financial statement. So after the auditor's responsibility is the topic of location of description of auditor's responsibilities for the audit of financial statement. So where will the auditor's responsibility? We have done three parts now. So where will all these three parts come? So since the information that is contained in all three parts is what? Voluminous. So that is why there is a topic that what can be the location of description of auditor's responsibility for the audit of financial statement. So it can be within the body of auditor's report, which is what generally happens. It is within the part of the audit report. Or it can be within an appendix to the auditor report, in which case the auditor's report shall include a reference to the location of that appendix. That is an annexure, right? Or a specific reference within the auditor's report to the location of such description on a website of an appropriate authority where law, regulation or national auditing standards expressly permit the auditor to do so. So it can be within the part of the auditor's report, or it can be shown as an appendix and annexure, or a reference to the website can also be mentioned where such responsibilities are mentioned if permitted by law, regulation, national auditing standards, right? Now let us just have a look at the rest of the part of the audit report that we were just having a look. So management responsibility that we have seen. Now auditor's responsibility. See. So our objective is to obtain reasonable assurance, है ना? So objectives का first part था, reasonable assurance का था and misstatement, right? So reasonable assurance define किया हुआ है, and then misstatement can be due to fraud and error. See, and the definition has been given. ठीक है? Then we exercise professional judgment, maintain professional skepticism throughout the audit. We also identify assets. See, we obtain an understanding of internal control, evaluate the appropriateness of accounting policies, appropriateness of management use of going concern. Then is overall PSC, presentation structure and content. Then communication. So we communicate with those charged with governance regarding what the plan, scope, timing, and significant finding, SA 260. Significant deficiencies in IC, SA 265. We also provide those charged with governance as a statement with respect to ethical requirement independence, again SA 260. ठीक है? And then from matters, we determine more significance to the audit, key audit matters, SA 701 का. ठीक है? Right? Is it clear? Then report on other legal and regulatory requirements. So apart from the reporting that is required under the essays, if any other reporting requirements are there, like CARO 2020 or Section 143, subsection 3 of the Companies Act, so such reporting will come under the head report on other legal and regulatory requirements, right? And then for the name of the firm, the registration number of the firm, the signatures, then the name of the signing partner, his membership number, the unique document identification number, the place, the date, and the signatures. So place is here. This is just formatting problem. Okay. So with this, we have covered what? Essay 700. So let us do two test your understanding questions before starting with the next topic. So just go through this question. This is on page number 8.23. Maithili Thakur, a CA student, was pursuing perusing the audit report of a company. Perusing is reading, going through. Her eyes fell on an 18-digit alphanumeric number stated at the end of the audit report below the signatures of auditors and membership number. Make her understand the objective and significance of such a randomly generated number. Is it required to be stated in case of audit reports only? Quickly send in your replies. So one prompt reply from, let me see, Om Krishna Gupta, Swati Shoaib. Required in audit report and certificates, correct. Required in documents and certificate, correct. Unique document identification number. I hope you will be able to answer to this question correctly. So the answer that is given at the back, it says that the 18-digit alphanumeric number noticed by her at the end of audit report is unique document identification number. It is system generated unique number. Its basic objective is to curb the malpractices of non-CAs impersonating themselves as CAs. It helps in securing reports and documents issued by practicing CAs. It is required to be stated in case of reports as well as certificates. Clear? Read this, test your understanding. Question number 2. CA Maya has conducted audit of a company. She has asked Sana, CA student undergoing training in her office, to prepare draft audit report. Sana was part of engagement team conducting the audit. She has been further told to prepare draft report expressing unmodified opinion. After drafting para comprising unmodified opinion, Sana feels there is no need to provide basis for opinion. Discuss why her thinking is not proper. So Bhumika correct, Shoaib correct, Swati correct, Om Krishna Gupta correct. See, we have discussed this question, exactly the same kind of question. Send in your reply. Is the thinking of Sana correct? And if not, why? What is the keyword that should come here? The basis of opinion section provides the dash. Send in your replies. I highlighted it when we were discussing the basis of opinion section also. Why have you mentioned unmodified opinion, Om Krishna Gupta? Read the question carefully. So it says that she has been told to prepare draft report expressing unmodified opinion. After drafting para comprising unmodified opinion, Sana feels no need to provide basis of opinion. Discuss why her thinking is not proper. So she is not correct. It is already given in the question also. Tell me why, because basis of opinion provides dash. What should come in this dash? Let me just take you through that relevant paragraph. Then you will be able to understand what keywords I'm talking about. The basis of opinion paragraph provides important context about the auditor's opinion. So her view is not correct. Swati, Om Krishna Gupta. Now I hope you are able to understand. Someone is mentioning sufficient appropriate audit evidence. Someone is mentioning auditor's opinion. Nahi. Om Krishna Gupta is saying correct. Swati, you also reply. ठीक है. Others also please reply. So with this, we have finished essay 700 and this auditor's report prescribed by law and regulation, you can do it as a homework. This is the illustration that we have just seen the entire audit report. Okay. This other matter paragraph, this we will discuss when we will be doing essay 706. So I hope it is clear. So if you just summarize, देखो essay 700 है ना. So today we started our discussion with uh, what is auditor's report, and then essay 700, which is forming an opinion and reporting on the financial statement. Then we discussed that what are the various benefits if the audit report is all the audit reports are made in accordance with essay 700. That consistency aata hai, comparability aata hai, increase in credibility in global marketplace, hai na, all those points. Then what are the objectives? Objectives are to form an opinion based on the evaluation of the conclusions, right? And with respect to that conclusion, we saw that auditor will consider 3 points: whether sufficient appropriate audit evidence has been obtained, whether the evaluation of the uncorrected misstatements are material, and then the various evaluation. And when we did this evaluation, we saw the qualitative aspects, जहां पर हमने 260 की बात की, हमने management judgment की बात की. We talked about the disclosures and the amounts. Then we talked about selective correction, and then management bias. And we talked about SA 540. See, these are the keywords, and this is the way you should learn. Then we had specific evaluation. Specific evaluation with 2 points relating to accounting policies. That accounting policies adequately disclosed, consistently complied, selected and applied consistently. Then the 2 points relating to this. Next point relating to whether the estimates are reasonable. Next, whether the information is reliable, relevant, um, comparable, understandable. Then whether the adequate disclosures are made, and last but not the least, terminology and the title. Then with respect to the fair presentation, we saw that auditor will see whether fair presentation is achieved, and with respect to that, we will look at the presentation structure, content, and along with that, whether the financial statement along with the underlying transaction, whether they achieve fair presentation. And lastly, we see that whether the financial statement adequately refer to or describe the applicable financial reporting framework. I hope it is clear. Then we saw general purpose financial framework, in which we saw fair presentation framework and compliance. Both the framework require the compliance with the requirement, but fair presentation acknowledges two things. That one is that management may uh, give disclosures beyond those required, explicitly or implicitly given by the framework. And the second is acknowledges explicitly that management may depart from the requirements in extremely rare circumstances. Unmodified opinion is given when the auditor concludes that based on the audit evidence obtained, that the financial statement are prepared in material respect in accordance with the applicable financial reporting framework. And then we did the content, that audit report should be in writing, having the specific headings. Title hona chahiye, addressee is there, Then auditor's opinion means that it should identify the entity, state that financial statements have been audited, identify the title, refer to the notes, and then the date and the period. Basis of opinion में four things that are important, that एसेस के अकॉर्डिंग हुआ है, responsibilities को रेफर करना है, then audit evidence has been obtained, and before that, that independence and ethical requirements have been complied with, and it provides important context with respect to the auditor's opinion. Okay. Then another important topic was auditor's responsibility, which we divided into three parts. I hope it is clear. SA 700, I hope the entire essay is clear. Now let us start with the next essay for today, that is essay 705, and the name is Modification to the Opinion in the Independent Auditor's Report. Bhumika, your answer is correct. Try to include that point, that basis of opinion provide an important context to the opinion of the auditor. Is it clear, Bhumika? Now, the next essay is Modification to the Opinion in the Independent Auditor's Report. So see, if you just look at this diagram, so audit report is there, unmodified report and modified report. So unmodified report is what? Unmodified opinion that we have done. Modified report can be by way of modified opinion, qualified, adverse, or disclaimer, or modification can be by way of, so modification to the report can be by way of adding emphasis of matter or other matter paragraph. So this we will be doing when we will do essay 706. So abhi we are doing essay 705. I hope it is clear. Okay. So essay 705 deals with the auditor's responsibility to issue an appropriate report in circumstances when informing an opinion in accordance with SA 700, auditor concludes that a modification to the audit report on financial statement is necessary. So when auditor was conducting the audit and he was, when the auditor was issuing the appropriate report in circumstances, when informing an opinion in accordance with SS 700. So auditor, when he was forming an opinion in accordance with 700, why? Because that form, content, everything is going to be the same. And when circumstances are such that he concludes that a modification is necessary, then instead of SA 700, now auditor will come to SA 705. Or I can say in addition to SA 700, auditor will also consider SA 705. Okay? It also deals with the form, content of audit report, how the form, content of audit report is affected. So the basic form and content will be as given by SA 700, but how the same will be affected when the auditor expresses a modified opinion. Okay? So when will an auditor give a modified opinion? Tell me what is meant by the term modified. Quickly send in your replies. What is meant by the term modified? Changed. Right. Right. So, see, auditor gives an unmodified opinion when auditor concludes that the financial statement as a whole are free from material misstatement. They are prepared in all material respect in accordance with the applicable financial reporting framework. Clear? Now, when will auditor give a modified opinion? So there can be two situations, that when auditor obtains sufficient appropriate audit evidence, and when auditor is unable to obtain sufficient appropriate audit evidence. So when the auditor obtains sufficient appropriate audit evidence and he concludes that financial statement as a whole are not free from material misstatement. So can he give an unmodified opinion in this case? No. He will give a modified opinion. So the first is The auditor concludes that based on the audit evidence obtained, that sufficient appropriate audit evidence has been obtained. The financial statement as a whole are not free from material misstatement. And the second situation can be where he is unable to obtain sufficient appropriate audit evidence to conclude that the financial statement are free from material misstatement. So he needed the sufficient appropriate audit evidence in order to conclude that the financial statement are free from material misstatement, but he is unable to obtain that sufficient appropriate audit evidence. In such situation also, auditor cannot give what? An unmodified opinion. So he will give a modified opinion. Is it clear? So auditor will give a modified opinion when the auditor concludes that based on the audit evidence obtained, the financial statement as a whole are not free from material misstatement, or the auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statement as a whole are free from material misstatement. Clear? So what are the objectives? So derive the objective from these circumstances only. So the objectives are to express clearly and appropriately modified opinion. So whether to give qualified, whether to give adverse, or whether to give disclaimer of opinion. So that is why appropriately modified opinion on financial statement, that is necessary when under the above two circumstances, that when sufficient appropriate audit evidence has been obtained that the financial statement are not free from material misstatement, or where he is unable to obtain sufficient appropriate audit evidence. I hope the circumstances as to when to give a modified opinion and the objectives in terms of SIF 705 are clear. So what are the objectives? That to express clearly and appropriately modified opinion on financial statement, that is necessary when the auditor obtains sufficient appropriate audit evidence that financial statement as a whole are not free from material misstatement, or he is unable to obtain sufficient appropriate audit evidence. Is it clear? Okay. Now, what are the various types of modified opinion? So these are qualified opinion, adverse opinion, and a disclaimer of opinion. So in my notes, I've mentioned Q, A, D a number of times. So consider Q as qualified, A as adverse, and D as disclaimer of opinion. So when will auditor give qualified opinion? When will auditor give adverse opinion? And when will auditor give a disclaimer of opinion? So before considering that, let us just understand what is meant by the term pervasive. Quickly send in your replies. What is the meaning of the general meaning of the term pervasive? We are on page number 8.37 of your module. Swati is saying extended to whole, correct, or present everywhere. Yes, omnipresent, present everywhere. Correct, Kiran Bala. Correct, Swati. Shoaib, correct, which is not confined to particular assertion. Okay. So pervasive, if we just look at the dictionary meaning, it is omnipresent, which is present everywhere, right? So why we are using the term pervasive with respect to the financial statement, effects on financial statement? So basically, the term pervasive has been used in context of misstatements to describe the effects on financial statement. Whose effect? Of misstatements, or possible effect of financial statement of misstatements if they are undetected due to inability to obtain sufficient appropriate audit evidence. So if you remember, I told you that sufficient appropriate audit evidence is received, that financial statement as a whole are not free from material misstatement, right? And then I said that there can be another situation where sufficient appropriate audit evidence is not received. So wherever sufficient appropriate audit evidence is not received, so we will use the term possible effect of undetected misstatement, because sufficient appropriate audit evidence to mila hi nahi hai na that misstatement is there. So misstatement can be there. So possible effect. ठीक है. So now it says that the term pervasive has been used for misstatements in order to see the effect of such misstatement on the financial statement. And here what I'll say, in order to see the possible effect of of misstatement if they are undetected due to inability to obtain sufficient appropriate audit evidence. Clear? So what is meant by pervasive effect? So pervasive why we have used this term? In order to see the effect of the misstatement on the financial statement. Or if let's say the second situation, that sufficient appropriate audit evidence we are unable to obtain, then to see the possible effect of the misstatement if they are undetected due to inability to obtain sufficient appropriate audit evidence. Okay. Now, pervasive effect means that the misstatement is not confined to specific elements, account, or items of the financial statement. So it is not limited to particular assertion, or you can say it is not limited to particular account or item. And if it is so confined, represent or could represent a substantial portion of financial statements. So let's say any misstatement is there which is impacting your, let's say, debtors and stock. So these are as such confined to specific elements. But let's say these are impacting 95% of debtors and stock. So though these are confined to debtors and stock, they represent or could represent a substantial portion of the financial statements, and in relation to disclosures are fundamental to the user's understanding of the financial statement. So disclosure will be considered as pervasive if it is what fundamental to the user's understanding of the financial statement. So let's say the debtors and the stocks of the organization, they constitute, let's say, 60% of the total assets of the company, right? So if that misstatement pertains to only debtors and stocks, but though they are confined to debtors and stock, but a substantial portion of the financial statement they are representing. Is it clear? Is it clear? Right? So this is meant by pervasiveness. So when we decide as to whether a qualified opinion is to be given or an adverse or a disclaimer of opinion, so pervasiveness we will see, that is the impact or the effect of such misstatement on the financial statement. Okay? Is it affecting the entire financial statement? Is it affecting only one or two assertion that auditor is going to consider, right? Also, we are going to see what materiality and whether a particular misstatement is material or not. Now you all know why, because you all have done SA 320. So most importantly, if the misstatement has the effect expected to influence the economic decisions of the users of the financial statement, then it becomes what? Material. It can be based on the size and the nature of the misstatement. We all have done SA 320 में. So when we are considering as to whether qualified opinion देना है, adverse देना है, disclaimer opinion देना है, we will consider the materiality as well as the pervasiveness of that misstatement. So materiality and pervasiveness. Is it clear? Now, which type of opinion is appropriate? So it says that the nature of the matter giving rise to the modification, that is whether the financial statements are material misstated, or in case of inability to obtain sufficient appropriate material misstatement, may be materially misstated. So first of all, the materiality and the auditor's judgment about the pervasiveness of the effect or possible effect on the financial statement. I hope this is clear. Now let us just have a look with respect to when qualified opinion will come, one adverse opinion will come, and one disclaimer of opinion will come. Whatever we have done, whether it is clear or not, please send in your replies. So we have seen what is meant by materiality. We have seen what is meant by pervasiveness, right? And you all know that there can be two situations, that sufficient appropriate audited evidence is received that the financial statement are not free from material misstatement, or that the auditor is unable to obtain sufficient appropriate audit evidence. Now, our different type of modified opinion will revolve around these situations only. What are these? Let us discuss these one by one. So auditor will give a qualified opinion. So the first type of modified opinion is what? Qualified opinion. When there can be two situations, right? So when having obtained sufficient appropriate audit evidence, so sufficient appropriate audit evidence has been received, auditor concludes that misstatements are material. So misstatement are material, but are not pervasive. So the misstatement is there, which is material, but the same is not affecting the financial statement as a whole. The pervasiveness is not there. So I told you that around these things only now our discussion will revolve. So qualified opinion कब देगा auditor? When sufficient appropriate audit evidence has been obtained, that auditor, based on the sufficient appropriate audit evidence, auditor concludes that misstatements are material but not pervasive. And the second situation can be when the auditor is unable to obtain sufficient appropriate audit evidence, but he concludes that the possible effect of the misstatement can be material but not pervasive. So the term here used will be what? Possible effect. That it is material but is not impacting the entire financial statement. Same way, when he is unable to obtain sufficient appropriate audit evidence, the possible effect on the financial statement of undetected misstatement, because undetected है ना, अभी तो sufficient appropriate audit evidence मिला ही नहीं है, if any, could be material but not pervasive. So if I have to summarize, so I can say that क्वालिफाइड ओपिनियन में सफिशिएंट एप्रोप्रिएट ऑडिट एविडेंस मिला है दैट मिसस्टेटमेंट इज मटीरियल बट इट इज नॉट परवेसिव, or auditor is unable to obtain sufficient appropriate audit evidence that the possible effect of undetected misstatement could be material, but he concludes that the possible effect of undetected misstatement could be material but not pervasive. Is it clear? And just try to understand, students, wherever the effect is also pervasive, there in the first situation adverse opinion will come, and in the second situation when he is unable to obtain sufficient appropriate audit evidence, disclaimer will come. So let us just have a look. So what I have told you, let me just summarize it here. So sufficient appropriate audit evidence is received that the misstatement is there which is material but not pervasive. And second, auditor is unable to obtain sufficient appropriate audit evidence, but he concludes that the possible effect of undetected misstatement could be material but not pervasive. Right? And the second is what? Adverse opinion. So here, when the auditor will conclude that sufficient appropriate audit evidence has been obtained, that the misstatement that has been detected is material as well as pervasive. It is material as well as pervasive. Auditor will give what? Adverse opinion. So let us just read it. The auditor shall express an adverse opinion when having obtained sufficient appropriate audit evidence. Sufficient appropriate audit evidence मिल गया है. Auditor concludes that misstatement individually or in aggregate are both material and pervasive to the financial statement. So auditor will give an adverse opinion. And disclaimer of opinion. So here, now let us discuss this. So unable to obtain sufficient appropriate audit evidence. So this has not been received, but auditor concludes that the possible effect of undetected misstatement can be both material and pervasive. Auditor will give what? Disclaimer of opinion. So let us read this. The auditor shall disclaim an opinion when he is unable to obtain sufficient appropriate audit evidence on which to base the auditor's opinion, and he concludes that the possible effects on the financial statement of undetected misstatement, if any, could be material and pervasive. So students, now though I really want you all to understand that the keywords, why they are there. So disclaimer of opinion में possible effect, undetected misstatement, if any, could be. So these are all what? Your keywords that you can learn once you have understood the concept properly. So these keywords will come automatically when you will write the answer. Right? So qualified में क्या है? Sufficient appropriate audit evidence has been received and auditor has been obtained, and auditor concludes that the misstatement is material but not pervasive, or auditor is unable to obtain sufficient appropriate audit evidence, but auditor concludes that the possible effect on the financial statement of undetected misstatement, if any, could be material but not pervasive. So qualify, right? That though that thing is material, it is not impacting the entire financial statement. Adverse, the auditor shall express an adverse opinion having obtained sufficient appropriate audit evidence. Auditor concludes that the effect of the misstatement individually or in aggregate on the financial statement is both material and pervasive. And disclaimer of opinion, when he is unable to obtain sufficient appropriate audit evidence and he concludes that the possible effect on the financial statements of undetected misstatement, if any, could be both material and pervasive. Is it clear? Is it clear? So we have done qualified, adverse, and disclaimer. Let us just have a look at this from this table also. So nature of matter giving rise to modification. So first and foremost, auditor will see whether that misstatement is material. अगर material ही नहीं है, so question of qualifying will not come na, because we as an auditors, we are concerned with material misstatement. And the second thing is pervasiveness of the effects or possible effects on the financial statement. Why possible effect term? Because disclaimer we have unable to obtain sufficient appropriate audit evidence we have. So when the financial statements are materially misstated and it is material but not pervasive, auditor will give qualified opinion. It is material as well as pervasive, auditor will give what? Adverse opinion. There is inability to obtain sufficient appropriate audit evidence, and the same is what auditor considers that the possible effect of undetected misstatement, if any, could be material but not pervasive, auditor will give qualified. And here, if it is both material and pervasive, auditor will give a disclaimer of opinion. Right? So let me just explain the example that are given in your module. By that, the entire concept of this modification is going to be very much clear to you. Read this illustration, illustration number 9 on page number 8.37. So Super Duper Limited is a company engaged in manufacture of office furniture. Messrs. Young, Old and Associates are the statutory auditors of the company for the year 21-22. During the year under audit, the engagement partner, CA Young, noticed that the company has not bifurcated its loan in long term and short term. CA Young understand that such misstatement is not pervasive, though the same is material. See, though the same is material. So, since it is material, auditor cannot give an unmodified opinion, because unmodified opinion के लिए तो the entire financial statement should represent a true and fair view. So, this is a misstatement, which is material also. So, auditor cannot give unmodified opinion, but it is not pervasive. So, if auditor gives adverse opinion, it will show that the effective pervasive. So what is the option left? Auditor will give an qualified opinion. Auditor will give a qualified opinion. Is it clear? So Swati, Om Krishna Gupta, Bhumika, correct. ठीक है. Now, read this illustration given on page number 8.38. Mrs. Taj Rajan Associates. ठीक है. So CA Taj, the engagement partner, found that stocks and debtors of the company constituting about 80% of the total assets of the company are not realizable. Further, cashier of the company has committed a fraud during the year under audit. Both facts are not reflected in financial statement for the year ending 31st March 22. Accordingly, CA Taj is of the view that the impact of both situations on the financial statement is material and pervasive. And thus the financial statement represented distorted view of state of affairs. So see, there are misstatements which are material as well as pervasive. So can auditor give an unmodified opinion? So the answer is no. Will giving a qualified opinion can be the correct course of action? Answer is no. Why? Because the matter is material as well as it is having an impact on the entire financial statement. It says constitutes 80% of total assets, stocks and debtors, right? So qualification is not sufficient here. So what will auditor do? Auditor will give an adverse opinion. Okay? So see, it is mentioned that CATR should also consider reporting since fraud is there, so CARO reporting is there, which we will be discussing when we will do CARO 2020. So reporting requirement of CARO is also there. Further, under essays, auditor is going to give what? Adverse opinion. Bhumika correct, Swati correct, Om Krishna Gupta correct. Read this illustration number 11 on page number 8.39. Delightful Limited is a company engaged in production of smiley balls. During the financial year 21-22, the company transferred its account to computerized system from manual system of accounts. Since the employees of the company were not well versed with the SAP system, there were many errors in the accounting during the transition period. As such, the statutory auditors of the company were not able to extract correct data and reports from the system. Such data was not available manually also. Further, the employees and management of the company were not supportive in providing the requisite information. Explain the kind of audit report that the statutory auditor of the company should issue in this case. See, auditor is not able to get the data. He is unable to obtain sufficient appropriate audit evidence. ठीक है? And if you just look that there has been a transition from manual system to SAP is a ERP system whereby the various functions are integrated. So SAP system whereby there are many errors in the accounting during transition and no extract of correct data reports are available. Such data is not available manually also. Further, employees are also not supportive. So tell me, is it material and pervasive? See, for the entire data, just read. There is a student whose doubt is, I think Swati Singh, why pervasive? See, it says that the company transferred its accounts to computerized system. The employees of the company are not well versed with the new system. There are many errors in the accounting during the transition period. As the statutory auditors were not able to extract correct data reports from the system, also manually data is not available. So tell me, is this a pervasive effect? So the answer is yes. Why? Because for the entire financial statement that the auditor needs, the data is not available. So this is impacting the audit of the financial statement as a whole. right? Also, the employees and management are not supportive. So it is not happening that auditor is not able to obtain data with respect to debtors, or the auditor is not able to obtain data, let's say, with respect to assets only. It says for the entire data, for all the assertions, this is happening. So pervasiveness is there. Swati, is it clear? Om Krishna Gupta, correct. Bhumika, correct. Swati Singh, it's clear. ठीक है? So it says, see, when the statutory auditor of the company is unable to obtain sufficient appropriate audit evidence, the auditor should give a disclaimer of opinion as per SA 705. In the present case, the statutory auditor of the company is unable to extract correct data and reports from SAP system for conduct of audit. Also, such data and reports are not available manually. And the statutory auditor therefore should give what? Disclaimer of opinion. So just when you have to consider pervasive hai ya nahi, just try to understand that what is the effect. So you just see that whether it is confined to any particular item of the financial statement, or is it impacting the entire set of financial data that the auditor requires for conducting the audit. ठीक है? Now, which type of opinion is appropriate? So, auditor will see the nature of the matter, that whether it is material or not, and the pervasiveness, and how auditor will consider the impact that you all have you all have done with me. Okay. Now, let us just see this next. Go through this test your understanding 3. Then we'll. No, just a minute. Just a minute. Let us do this table first, then we will do that test your understanding 3. So, let's say the auditor has accepted the engagement, and after the engagement, management imposes certain limitation on the auditor, which leads to inability to obtain sufficient appropriate audit evidence. Right? Are you able to understand? So once the auditor has accepted the audit engagement, and after that management imposes certain limitation on the auditor, which leads to inability to obtain sufficient appropriate audit evidence. So let's say auditor has accepted the engagement, he is conducting the audit engagement, he is conducting the audit, and during the course of audit management says that you cannot communicate with third parties, the bankers or the trade receivables or the trade payables. So this is a limitation imposed by the management on the auditor, and because of that there is inability to obtain sufficient appropriate audit evidence. I hope the example is clear to all of you. Now what is to be done? See, the example that I've given is, for example, management imposes a limitation that the audit team cannot communicate with third parties. Third parties can be bankers, trade receivable, trade payables, or legal counsels, etc. Cannot communicate with. Who cannot communicate? Audit team. Cannot communicate with third parties. ठीक है? So what will auditor do? Shall auditor straight away withdraw from the audit engagement? Is withdrawing from the audit engagement is the only solution? So that we are going to discuss. This flowchart beautifully explains this entire topic. So first of all, when there is a limitation, auditor will request the management to remove the limitation. So auditor will request the management that please allow us to communicate with the third parties. If management removes the limitation, that management says, okay, you may communicate, auditor will proceed with the audit procedures. Auditor will send the external confirmations, or he'll inquire, or whatever procedures he want to perform. If management refuses to remove the limitation, that this limitation cannot be removed, you will not communicate, Auditor will communicate with those charged with governance and perform alternate procedures. So auditor will communicate this thing that management has imposed a limitation on us and has refused to remove that limitation. Auditor will communicate this fact to those charged with governance, and whatever alternate procedures he can perform, auditor will try to perform those audit procedures. ठीक है. Like with respect to trade receivables, trade payables, he may check the subsequent receipts or the subsequent payments, right? With respect to the trade payables, trade receivable, he may check the bank statement. So alternative procedures, right? If auditor concludes that still he is unable to obtain sufficient appropriate audit evidence, he is unable to still obtain the sufficient appropriate audit evidence even after performing the alternative procedures, auditor will consider the possible effects. So if he considers that a possible effect of that limitation or that can be material but not pervasive. So sufficient appropriate audit evidence तो नहीं मिला है. So possible effect देखना पड़ेगा. Possible effect. So if the possible effect is what? Material but not pervasive. So auditor will give what? Qualified opinion. And if the possible effect is material as well as pervasive, auditor will what? He will either withdraw from the engagement if it is possible, or he'll give what? Disclaimer of opinion. Is it clear? So let us just have a look at this from your module. Achha, this is just a minute. Just a minute. So see, if after accepting the engagement, the auditor becomes aware that management has imposed a limitation on the audit that the auditor considers is likely a need to express a qualified or disclaimer of opinion. First of all, auditor shall request that management remove that limitation. If management refuses to remove the limitation, the auditor shall communicate to those charged with governance unless all those charged with governance are involved in managing the committee, and shall determine whether it is possible to perform alternative procedures to obtain sufficient appropriate audit evidence. If auditor is unable to obtain sufficient appropriate audit evidence, he will determine the implications, that is whether the possible, now I hope you are able to understand why the term possible is there, on the financial statement of undetected misstatement could be, if any, material but not pervasive, then he'll qualify the opinion. And if it is both material as well as pervasive, so if the auditor concludes that the possible effect on the financial statement of undetected misstatement, if any, could be both material as well as pervasive, so that a qualification would be inadequate to communicate the gravity of the situation. The gravity is what? The importance of the situation. The auditor shall withdraw from the engagement where practicable and possible under the applicable laws and regulations, or if withdrawal from the audit before issuing the auditor's report is not practicable or possible. See, auditor's fees is also involved. No? Withdrawing cannot be a practical situation or that solution all the time. So he shall disclaim an opinion on the financial statement. If the auditor withdraws as contemplated in B above, before withdrawing, auditor shall communicate to those charged with governance any matters regarding misstatement identified during the audit that would have given rise to modification of the opinion. So if auditor withdraws, if he withdraws, there is no need to give an opinion. But auditor will discuss with those charged with governance that these are the situations or the misstatement that would have given rise to a modification of the opinion. Right? I hope this topic is clear. Read this, test your understanding third, and this also is a very important question. Just a minute. I hope you are able to see the screen. Just a minute. I'll share it again. So, CA's Saras Bhai Patel, while conducting audit of an entity, feels that there is an atmosphere of non-cooperation cooperation all around. He has not been provided with necessary support for attending inventory count process at the year end. Besides, CFO is not providing him in present addresses of customers as well as suppliers for sending external confirmations. Even mail IDs have not been provided in pretext of business confidentiality. He was not able to verify revenues of entity due to lack of complete details. For verifying expenses, he has been asking for bills on sample basis, but staff has been making lame excuses. The matter was brought to knowledge of higher echelons. Echelons is what the officials of management, but of no avail. The auditor feels that there could be a misstatement and their possible effects would be material and affecting many aspects of financial statements. Assuming it is not possible to withdraw, what type of opinion should the auditor give? Waiting for replies, not possible to withdraw. So Swati is saying, hence provide disclaimer of opinion, correct. Om Krishna Gupta is saying disclaimer of opinion because not able to get sufficient appropriate audit evidence could be material and pervasive and he cannot withdraw. Right? Others also please reply. So I hope your understanding of these topics and learning is clear. Kiran Bala is saying disclaimer correct. Okay, so we have done this also. Now go through this illustration number 12 also. We are on page number 8.42. Students, I'll try to cover this chapter in the next session. But in case, since a number of essays are there, and most importantly, Karuk 2020 report is also there in this chapter. So if in case we are unable to complete this chapter in the next session, so the session that is scheduled for your chapter number 9. So I'll take half an hour out of that session and I'll try to complete this chapter when we will start with chapter number 9, before starting with chapter number 9. So Messrs. Desi and Associates are the statutory auditors of Zebra Limited for the financial year 2021-22. CA Daisy, the engagement partner, wants to verify the cash in hand. Read this question carefully. Do not look at the answer. Cash in hand as on 31st March 2022. The cash balance of the company is rupees 1 lakhs. And the turnover of the company for the year is 6 crores. ठीक है तो अभी तक तो you were given as to what is auditor feels that this is material as well as pervasive, this is material but not pervasive. यहाँ पर you will have to decide on your own. So 1 lakh का cash balance है and turnover is 6 CR. The and auditor is unable to what? Verify the cash. The management of the company informs CA Daisy that such cash verification is not possible as the cashier is on leave for his marriage and no other employee of the company is available as all are busy in year-ending activities. Explain the relevant provision to deal with such a situation. Do not look at the answer. Try to analyze the situation and give answers on your own. Om Krishna Gupta, correct. Swati, correct. Bhumika, correct. Kiran, you also reply. Kiran, Shoaib, Sunil Gangadev, Amar, BCB, please reply. Kiran Bala Singh. So now let us just, let me just see who's answered. ठीक है. So see, he wants to verify, she wants to verify the cash, but that is not possible. She is unable to obtain sufficient appropriate audit evidence with respect to cash verification. ठीक है. So see, if after accepting the engagement, the auditor becomes aware that management has imposed a limitation on the scope of audit, that the auditor consider is likely in a need to express a qualified or disclaimer of opinion, the auditor shall request the management to remove the limitation. So auditor will request the management that please allow me to verify the cash. In the present case, CA Daisy, the statutory auditor, is unable to verify the cash in hands of Zebra Limited as on 31st March. The same is due to limitation imposed by the management, which is due to non-availability of the cashier. In such a situation, CA Daisy should perform alternate procedures to verify the cash in hand. Further, CA Daisy should consider the impact on the auditor's report and may consider giving what? Qualified opinion. See, 1 lakh vis-a-vis 6 CR, right? So a qualified opinion, right? Is it clear? See, cash verification is required, right? So this aspect as such is material, but is it impacting the entire financial statement? So no. So pervasiveness is not there, right? Is it clear? So she may consider giving a qualified opinion. Why? Because pervasiveness is not there. Is it clear? Swati Singh, yes. Others also please reply. Om Krishna Gupta Singh, qualified opinion, still material but not pervasive because cash, checking of cash is important but not possible. Correct. Now, these topics I'll try to cover from the module itself. One topic I'll take, form and content of audit report when the opinion is modified. So what will be the changes? If you remember when we were doing starting SA 705, we saw that it deals with how the form and content will change. Okay, so what will be the changes? So first and foremost, students, let me just take you to that audit report. So this is the audit report, right? So now here, instead of opinion, the term adverse opinion or qualified opinion or disclaimer of opinion will come. So this heading will change, right? And here in the opinion paragraph, when auditor says that in our opinion to the best of our knowledge, this is also going to change because true and fair to hai nahi na. Because true and fair to auditor cannot give. So what will be the changes? Let us just see. So first of all, heading will change. So see, when the auditor modifies the audit opinion, the auditor shall use the heading qualified opinion or adverse or disclaimer, whichever is appropriate instead of what? Opinion section. Clear? First and foremost. Then when the auditor is giving qualified opinion, so when he is expressing a qualified opinion, तो वो सब तो देना ही है. That entity क्या है, financial statements कौन से है, we have audited, all that will come. But in the next paragraph, when the auditor expresses a qualified opinion due to a material misstatement in the financial statement, the auditor shall state that except for the effects of the matter described in the basis for qualified opinion section, the financial statement represent a true and fair view. Because see, the misstatement is though material, it is not pervasive. So that is why in the basis of opinion paragraph, auditor will explain that why this is material. So auditor will say, except for this, rest all represents a true and fair view in a very simple language. So what will be the language of the auditor's opinion? except for the effect of the matters described in the basis for qualified opinion section. When reporting in accordance with fair presentation framework, the auditor will mention that financial statement present fairly in all material respects or give a true and fair view in accordance with the applicable FRF, or in case of compliance framework, auditor will say that the accompanying financial statement have been prepared in accordance in all material respect in accordance with the applicable FRF. So what is the keyword? Except for the effects of the matters. And students see qualified opinion can come when sufficient appropriate audit evidence is obtained that material है misstatement but pervasive नहीं है. And it can also come when unable है sufficient appropriate audit evidence. But auditor concludes that the possible effect could be could be material but not pervasive. So when this is the situation, what will auditors say? Except for the possible effect. So the term effect will be changed by what? Possible. So this is what is mentioned here. When modification arises from inability to obtain sufficient appropriate audit evidence, the auditor shall use the corresponding phrase except for the possible effect of the matters. Is it clear? So the language will be except for this, everything represents a true and fair view in a simple language, right? In case of adverse opinion, so here auditor cannot say except for this, but auditor will say what? First of all, try to understand that in the basis of, like here we are saying opinion paragraph will be changed by adverse opinion paragraph heading. Same way, basis of opinion, basis for opinion will be changed by basis for adverse opinion section. And there in the basis for adverse opinion section, we will be explaining the entire matter. So we will mention here in the opinion section that because of the significance of the matter described in basis of adverse opinion section, when reporting in respect of financial fair presentation framework, the financial statement do not give a true and fair view. Or when it is prepared in accordance with compliance framework, the financial statement have not to be prepared in material respects in accordance with the applicable financial reporting framework. So you will say, in if I just say in simple terms, that because of the significance of the matters which are described in basis of opinion paragraph, the financial statement do not, basis of adverse opinion paragraph, the financial statement do not represent a true and fair view. If you talk about fair presentation, compliance में है तो वहां पर क्या लिखेंगे? The financial statement have not to be prepared in all material respects as per the applicable financial reporting framework. So qualified में क्या था कि material है pervasive नहीं है, so क्या था? Except for the effect or the possible effect, the financial statement represent a true and fair view. Adverse में क्या है? सब कुछ खराब है. So because of the significance of the matter described in basis of adverse opinion paragraph, the financial statement do not reflect a true and fair view. Is it clear? In disclaimer of opinion paragraph, यहाँ पर तो opinion देना ही नहीं है. We are disclaiming the opinion that I am unable to obtain sufficient appropriate audit evidence. I am not in a position to give the opinion. Right? So when the auditor disclaims an opinion due to inability to obtain the obtain sufficient appropriate audit evidence, the auditor shall state that the auditor does not express an opinion. So here auditor will express that he is not expressing any opinion on the financial statement. State that because of the significance of the matters described in basis of disclaimer of opinion section, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis for audit opinion on the financial statement. And see, if you remember, students, when we did this opinion wala paragraph in unmodified opinion, I told you that auditor will write, we have audited. Just a minute. We have audited this line. But now when the auditor is claiming he is not able to audit now, he is not able to obtain sufficient appropriate audit evidence. So what will he write? So it says that amend the statement. Oh, just a minute. Just give me 5 more minutes, then I'll end the session. Amend the statement required by SA 700, which indicates that the financial statement have been audited, to state that the auditor was engaged to audit the financial statement. So what will be the starting line of the opinion section? We have been engaged to audit. So auditor will not write that we have audited, right? So with respect to the opinion paragraph, the first and foremost, with respect to disclaimer of opinion, the first change is what? Change of the heading. Now the heading will be disclaimer of opinion. Then auditor will state that we do not express an opinion on the accompanying financial statement. Then auditor will state that because of the significant, the audit, because of the significance of the matter described in basis of disclaimer of opinion paragraph, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion. And last, he will amend the statement of as required by SS 700, which indicates that the financial statement have been audited, to state that the auditor was engaged to audit the financial statement. I hope this is clear. I hope this is clear. So I'll do one thing. I'll end the session here only. Why? Because the basis for opinion paragraph, it also contains a number of changes when the modification is to be done in the report, right? So students, I hope that whatever we have done today is clear, and it is again a really very, very important chapter. Next session, I'll definitely try to discuss the past year question, but again, it all depends upon the time that we have, that we will be left with after completing the entire chapter. So today we have covered SS 700 in entirety with all the test your understanding and illustration questions. 705 mein we have understood as to what is meant by qualified adverse and disclaimer, and what will be the change in the opinion section of the modified report, right? Next session, I'll be, which is on Monday, I'll be discussing with you the rest part of this chapter. And if we are left with any part, I'll try to cover it with the session that is scheduled for chapter number 9, right? So as usual, start studying, go through your module, try to cover all the chapters till where we have done, and more specifically with respect to today's topic, read the entire chapter, chapter number 8 till where we have done, and then attend the next session, right? So thank you and good evening, students.